Looking at where the value of the shilling is compared to many major international currencies and where the inflation rates are, of course, there are many questions of what lies ahead in 2019 for this economy. Now, today we look at what economists are telling us are the prospects for this country from the monetary policy perspective. The move by the central bank to maintain its benchmark rate for February 2019 at 10% is believed by observers to be a tough balancing act between controlling inflation and at the same time support private sector growth, which has of late posted dismal performance.
Although private sector growth has been on recovery path since January 2018, it remains below its historical trend, and its contribution to economic growth could be weighed down by the relatively weak performance of foreign currency-dominated loans.
The central bank rate, CBR, is one of the tools that the BOU uses to control money in circulation, as it is always picked as a signal by lenders to determine whether to increase or lower lending rates. In this case, the bank seems to have taken a middle ground by not increasing or reducing the rate, and it's easy to see why.
Although the inflation outlook over the 12-month horizon has improved compared to December 2018 forecast round, risks to the inflation outlook remain elevated. The escalating global trade frictions and lower than anticipated global growth may not only subdue external demand, thereby weakening Uganda's external position, but could also lead to volatility in the domestic foreign exchange market.
Away from the threats, the bank, however, maintains that the economy remains progressive or robust at the macro level, even when you may not feel this at individual level.
URA, tax corrections on domestic side of surplus of around 142 in the first half. We are talking about private sector credit. Remember that some time back, I think at the beginning of 2018, private sector credit was growing in the range of 5.8%. Now we're talking about above 10. Remember that in 2016-18, we're talking about growth of 2.9% growth. So from growing from 2.9% to 5 and then to 6, you see that actually it is a positive trajectory.
A portion of this optimism is believed to be driven by the changing agricultural fortunes and, relatedly, the country's strengthened regional trade position.
Agriculture has actually been performing very well in terms of access to credit. We now have an agricultural credit facility where there is a risk sharing between the banks and government. We are also seeing more commercialization of agriculture, which is helping in access to credit or in the assessment of credit.
Looking at 2019 from a monetary policy stance, one sees a mixed bag of both growth catalysts picking from the country's strengthened regional trade position and agriculture, but as well sure threats from far afield in the global marketplace.